of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Okay, folks, this is Larry Pesavento setting in for Tommy today. I'd like you to see this is a chart of the S&P so far today. You can see the high that we made early in the morning when the market opened at 9:30 New York time, and we've been steadily going down. Now, if you look at the middle of the chart, right there at around 11 o'clock, okay, that's when we took out the lows of last week. And then you'll notice we had a beautiful ABCD pattern stopping at exactly the 382, this high way back here, 50% of this high right here, and now we're going down. Now, this AI program is predicting the last hour and a half is going to be a rally, but the problem is this is the least accurate part of the AI program. That's the main thing. So all I'm going to show you is, I just do ABCDs, and boy, that's a great way to talk. These things have just been going straight down for quite a while here. You can see one after another, one ABCD after another, because the market is trending lower, and we're going to be doing this for a long time, folks. So my suggestion is, get used to using some of these things if you like, because they can be very, very helpful, in determining where your areas of support and resistance are going to be. But this is broken down below really significant support, as we have had in the gold market today, too, folks. The gold market has made some type of a top. I covered these in the newsletter this weekend, and I mentioned the importance of that low that we made on Friday. Because that low we made on Friday, folks, I've never seen so many buy signals in the stock market. And all I said was, if this thing doesn't hold, look out below, and you can see we're looking out below because it just keeps meandering down, and it's probably going to do this for quite some time. If we take a look at this on the daily chart, you'll be able to see that the importance of that low was right there. And look at that. That was the rally we get. And now this is what's going on now. That means we're going down a lot lower, folks. My guess is we're probably going to take out this August low before it's all over. And you don't think that can happen? We remember back here, we said the market had the possibility of doing this, and guess what? It's almost there. So that's at 5559. So pay attention to that number. We're at 556.11 now, but there's where we are right now. There was that move right here. All this moving forward is right there. That brings you in to 559, and that's the 78% level, okay, of the low from September the 3rd. And let's just see what it is from the low on August the 5th. You move it up, and it's going to be setting at, there's the 786, okay. Within 50 points, it's going to be at a 618 and a 786. So that should be a good resistance or support, or whatever you want to call it, at that particular point. But it's still a little bit early in the game, so we really don't know how these things are going to unfold. I've tried to talk about some of these things in a way that doesn't tell you that I'm super bearish, but I am bearish. But that yields to good buying opportunities, folks. Remember, what goes up must come down, and this is coming down pretty hard, which is what we usually like to see as these things unfold. Now, the opposite of this has been the Treasury bonds, but even they have had some problems here today. You can see here last night, we had a big ABCD pattern right here. Then it went up a little higher, okay, and now it's just meandering back and forth. Remember, on the daily chart, this is a very, very bearish pattern, folks. Now, we did take out the 382 from yesterday. So what we did on that rally, let's get this up here so you folks will be able to see it. It went right up to the 50%, just a little bit above it. This is a little 3-day rally, but the interest rates are going to be going higher, folks, not lower. The Federal Reserve doesn't have a lot of leeway to make rules about this stuff, because we have so much debt going out there with $1 trillion a year goes to pay the debt, and $1 trillion a year goes to pay the defense budget. So those are things that you got to consider, because it's not the return on your money, it's the return of your money. Now, here was another one that had a perfect ABCD. I did all of these ABCD. I put them in a file because people that are interested, if you want to email me at Larry@Trading Tutor and see all 10 of them. Yeah, I'm going to go through them just for the heck anyway. There's an ABCD right here in the crude oil last night. Excuse me, folks, at 9 o'clock this morning, there it was right there, 67.60. It's now broken down $170 to the downside. We had one small rally in between the day, and if you'll pay attention to it, it didn't even make a 382 retracement. But I'll just go a few, just to help out old Mr. Gartley, because he did so much for these things. Let's just take a look at some of these ones that we did here. I've looked at the S&P already. This is one we're going to take a look at. Okay, this was the S&P late in the day. This is when we broke. This is when we broke the number. This is when we rallied up. We're now trading at 56.17. That completes the A, B, C, D on this pattern that is going on right there. Also today, if you look at this a little closer, you can see there's the crude oil again doing the same thing. Hold on, just get that one up. And each one of these there's natural gas, folks. Natural gas, wait till you see this. I hope I can show you the ABCD pattern on this, because it's off the charts. We made a 382 rally here, and now we're trading down into this level right here. Okay, the next one, this is the Russell. You'll see here last night we had the market down to 2036, and it rallied up to this level right here, 50% of this range right back here, and it's 38% of that move right here, and now it's trading below 2030, as I recall. They're very close. Okay, the next one here was the gold. This was a beautiful pattern right here at the 61% retracement. It was also the 382 on this high right here, and gold is now trading at 296. Okay, and then we had one other one right here. This is the Dow Jones. This is when we had a rally here this morning, 42.61, and then we're down here. You can see this little red limit minder right here said that it should go off today, and that's in fact we are below that level now of 42,160. Okay, and then there was a couple more here before the clock on the wall. Here's the E-mini overnight, folks. Has a huge gap. I mean, it looked like this bull market was intact last night until it opened on Sunday night, and boy, it rallied for 5 hours to make a 61% retracement here at 57.757. That's a perfect A, B, C, D. I pointed this out in the video that I sent out. Then you broke down really hard, and guess what that number of 57.10 was, folks? That was exactly 382 off of this high right here. And now we're trading off the bottom of this page at 56.17, and we'll be heading lower most probably. Now the next one, here is the natural gas, folks. I couldn't believe this when I saw this. I watched this do this last night, and then I looked for a little 382 retracement, which we got, but it took a little while to get there. But there was a perfect A, B, C, D pattern. 491. Folks, that's had a $4,000 move to the downside, and its margin's only 2,900. That would be like the S&P dropping in half, because their margin is, I think 21,000 or something like that. So that's where we stay tuned. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Oh, brother. Okay, folks, Larry Pesavento for TFNN. I'm going to have to answer something here for a second here, if you'll give me a minute, and then I'll have a guest coming here. I'm actually out of town for a bit. This is Yes, please. Yes, I have a guest. I have a guest coming up to 2910. Please let him up, please. Okay, thank you very much.
All right. What was his? Yes, of course. Do you know? Can we get his name just so I don't send anyone else up?
He'll know. He's waiting for you. Okay, thank you.
Okay, is he standing by the elevator?
I think he's in the reception area.
All right, I'll see if I can find him.
All right,
no problem.
thank you very much. All right, bye-bye.
Thank you. Okay, bye-bye.
Bye-bye. Okay, sorry, folks. I happen to be out of the country right now, but this is I watch the cryptos overnight, because here's where we were on Sunday night. You see, we started breaking down. That was really strong. After that big ABCD came down, there was your target right here. Then all you were able to do was make a little 382, and then you've rolled over to the downside. So hold on one second. I've got to open a door here, and I'll be right back. It's not very far away, but it's for my speed, it's far away. So stay with me. Got so much going on in these markets. It's really exciting. So let's get on with the other things that I wanted to talk about. We ought to talk about the U.S. dollar and some of the other things that we've been watching for quite some time here. All right, now we've covered that. Let's get this out of the way. We want to go back and look at the dollar, because that was a thing to me that was a key to what we were watching here over the weekend, because the news was the dollar was dead. It has no chance at all. Well, folks, it has that big number. Now, we've been down here for 3 days. We haven't done very much. But if you look at this on the weekly basis, it's completed that major number right here, and now it's bounced back up. That means the euro has backed off a little bit, and the one that we've been most bearish on is the British pound. And of course, it's going down less than anything else. But let's take a look at it since we're on the subject. We'll just go down and bring up the British pound trade here, and see where we are. And it starts with a G, I believe. Okay, and get it up right here. Well, it's come down pretty good today. You can see here, there was the high that we looked at right here. Now it's down well over 100 and some pips. So if you sold the British pound, you've got about an $800 profit in it. So make sure it doesn't go to a loss. But it started, it's already taken out yesterday's low. And so that means it still looks like it's going to go lower. We've already talked about the gold, but let's look at it again, because everybody was extremely bullish on this, except for the fact that we were hitting the 78% retracement. Now, this is today's action in the gold, folks. Look at these beautiful A, B, C, D patterns all the way, folks. That's a $4,000 move in gold today. That's more than the move in the S&P. So we've got volatility coming into these markets. So, you know, watch them, because they can get out of control. Remember, this market for stocks has been going up since 2009. That's 15 years. And we've had some corrections along the way, but this one could be a real major correction. So just make sure you protect yourself in some respect, okay? All right, let's move out of the British pound and let's take a quick look here at the Japanese yen, and we'll be right with you. Hold on one second here. Here's the Japanese yen coming up right here. And hold on, there we are. You'll notice that it also completed oh dear, shut the front door and raise the rent, folks. Give me a break here. Look at the Japanese yen today, folks. Makes a lower low and immediately rallies 100 pips. That's because of this beautiful Gartley pattern that we've seen in all these others. Sometimes they work, sometimes they don't. But that's what I'm looking for, is the ones that work. The ones that don't work, I try to get out of dodge and don't stand in the way of it, okay? So that's what we're paying very, very close attention to here today. And one other one we have to take a look at, of course, is the euro itself. And boy, because that one really, I think it actually went up and made a slightly higher high today. I heard that in the news, but I don't really trust the news. So let's just see if it did that. No, it did not. You can see here, it did not quite take out the high, but it's now dropped 100 pips from its early morning price. So that means it's headed down. You can see it is starting to move lower as we speak here this morning. All right, now let's move on to the next one here, what we got to look at, and that is, hold on here, I'm trying to get, someone asked a question about silver, and then we will also answer a few questions about some of these stocks like Apple and Tesla and NVIDIA. Now you can see the big down move we're having in silver today. It's dropped more than $1 an ounce, which is considerable. There was your high yesterday, right at your 61% retracement, and now it's starting to move down. If that's the case, we'll just draw this in so you folks can see it. This is going to be your A leg, there's your B leg, there's your C leg, and your D leg is going to be coming in right about down here at around 30.42, and that'll take out all the lows of February, and then that's when you want to be buying. You know, this is a spot where, look at the head and shoulders here, folks. So even a child can see this. There's your left shoulder, there's your right shoulder. You stay there for 3 days, and it doesn't go anywhere. Well, I wonder what someone was thinking. And anyway, and now it's started down. Sometimes they go straight up, but other times they stop, and we don't know which ones work. That's the problem. That's why you've got to do them all, but you can't do them all if you're not in there swinging the bat, because if you have big losses, you're not going to make test grade. Now we're going to take a look here at Tesla, and we'll be able to take a look at it. You see, it's just totally given up the ghost here. We're at 272. Remember, this was our target here. We had a one-day rally and then bang, down again. Folks, this stock, look at this. It was been down now since December, all during December and January. It's dropped, over 20%, 25%, and it's just getting started, folks. So that's the main thing. Now, the good news is there's going to be a break coming up, but the bad news is I'm not going to be able to finish it. So I want to wind up the show here, and I'll try to be back on tomorrow if I can. Can't make any promises, but I've got a little bit under the weather, but I'm doing great. So I want you folks to live every day in an attitude of gratitude, and be sure that you put stops in on these positions, because if you don't, what you're doing is you're telling the market that I know more than the market does. Folks, and I can tell you with a great deal of experience and a great deal of sadness that that does not happen. The market's going to kick your little rear end till they get tired of kicking it and you get tired of losing, and then you'll do it. But if you go in with what you're going to risk instead of what you want to make, you're going to be far, far better off. All right? So I'll try to catch you guys tomorrow. I'll have some more charts for you, and I appreciate your support. So live every day in an attitude of gratitude, and may God bless, and we'll see you on the flip side tomorrow, God willing. So stay tuned for the next part of the show. Al will take care of you on that, and we'll see you tomorrow, hopefully.